and Sarah YouTube channel. I'm Sarah Willis, and today we'll be talking about how real estate investing can help you achieve financial freedom. If you follow our channel, you'll know that we love real estate investing, but we also really value our free time. And this is why we do this, because we want to buy ourselves more time. We ultimately want a passive investment. And we know that it's a powerful path to financial freedom. So for many, it can potentially build wealth, generates passive income, achieves long-term financial stability. But today we're going to explore how exactly real estate investing can help you reach these goals. So let's dive in and explore ways in which investing in property can set you on the path to financial independence and offer a roadmap for those considering this journey. One of the most powerful tools of real estate investing is equity. We build equity over time, and this is a significant benefit of real estate investing. As you pay down the mortgage on your investment property, you gradually own a larger share of it. So over time, the equity can accumulate, especially if the property's value appreciates. This growing equity can then sort of help you build down the line by you can leverage it for future investments by taking out loans against your equity, or you can use just equity that's in your home as a financial cushion, contributing to your overall assets and wealth on your balance sheet. So we know in some markets, equity just comes naturally. Some markets are really popular places to live, and just by buying and holding, you're gaining equity. But there's other ways to force equity by buying homes that need improvement and putting money into them, and then being able to have them reevaluated for more money than you put into it. And that's called forcing equity. Number two reason people think of when they think about real estate investing is their desire to generate passive income. And I'm going to break it to you. Passive income doesn't necessarily come right away in real estate investing. You definitely need to do some upfront work, but yes, the long-term goal is for it to be passive. So let's just say for now that it offers us the opportunity to generate a steady stream of passive income, depending on your situation, whether that's now or in the future. So by purchasing rental properties, this is one way that you can generate rental income and hopefully provide yourself with regular cash flow depending on the investment. Passive income can supplement your salary, it can cover living expenses, or it can be reinvested to grow your portfolio. So the key is to choose properties that offer passive cash flow, where the rental income exceeds the actual expenses like the mortgage and utilities and taxes and insurance, property management fees, and maintenance costs. So it's not easy in some markets that offer lots of equity building in order to find these passive income type properties, but there are definitely ways it can be done even in those equity strong, or like we like to call it here, the beef type markets. So that's the big goal, right, guys, is to be able to have enough equity in your properties to be able to afford somebody like a property manager to help make this investment passive for you. We know from life and nature that there is strength in diversity, and real estate investing and investing in general is no different. So diversification is definitely a crucial strategy for reducing your risk when you are looking for enhancing your returns. So typically when people think of investing, they're thinking about investing in the stock market, bonds, but adding real estate to your portfolio is definitely an excellent way to diversify, just in and of itself, because real estate performs and acts differently as an asset class than the stock market, for example. But even within real estate investing, it's important to have diversity So, you're not all vested in STRs and, we are in an area that just allows them outright, or, our rental income from those starts to go down because of occupancy and people are back in hotels because Airbnb rates are too high. We've seen this trend since COVID, right? Or you're not just in a market with all cash flowing long term rentals, because you're not going to see a lot of build of equity over time in those types of markets. Or you're not just in a market that is there to build you equity. It's good to have a little bit of diversity in finding properties that both cash flow in the short term, and then investing in these properties that build equity in the long term, but maybe are a little cash deficit in that time. So having the cash flow helps you balance out any negative cash flow with your equity or appreciating properties. So all that to say, real estate investments can also serve as a hedge against inflation, because property values and rents often rise with inflation. Savvy real estate investors know that there are lots of tax benefits and tax advantages to owning real estate across several different categories. So, having these tax deductions or tax benefits can boost your financial gain, offset your W 2 income taxes, and you're able to often deduct expenses related to property management, maintenance, mortgage insurance. Of course, we've got just regular depreciation or bonus depreciation if you own a short-term rental or you have real estate professional status. Also, you can write off the cost of property over time through this depreciation and, like we already said, reduce your taxable income. But it's really important to, in the process of growing your portfolio and growing your knowledge in real estate investing, to research this, really understand those tax benefits by working with a knowledgeable tax advisor that can help you maximize your savings and increase your financial return. Do your research, because when you get started, you probably won't know a lot in this sector, and it's an important thing to keep in mind as you build and grow, so you're doing it in the right way. We've already talked about appreciation a little bit, but we're going to get slightly more in depth about how we can think about leveraging appreciation even without forcing equity or adding our own improvements. So we know that real estate has potential to appreciate in value over time, but the most important thing if you're trying to leverage this is to be really strategic about your property selection and do your market research. Because if you are able to find areas and identify areas that have growing markets, up and coming neighborhoods like new construction can be actually a really good option for this. You can benefit from increased property values as demand rises for that particular area. So it's a pretty simple concept, but it can, if you're willing to wait and put the money in from the beginning and just wait a few years, it can definitely have significant profits by just making a good choice. Another reason why a lot of people get into this is the process of leaving something behind for those who are near and dear to us, children, for example, or other family. So a lot of us want to build a legacy with our real estate investing portfolios, so the people that we love and care about and are raising can choose to do what they want with their time. And we all know that time is the greatest asset. So the idea of accumulating and managing properties is, short-term work for long-term gain, because we're creating a valuable asset that can be passed down to our future generations. And it's going to offer them financial security. It's going to show them how hardworking the people ahead of them were and hopefully inspire them in that way. So a big part of this as you get going is also going to be contributed to thoughtful estate planning and property management to ensure that your investments are going to remain safe and protected and increase in value and eventually benefit your family for years to come. Finally, thanks for hanging with us. The last thing I want to talk about today is how powerful your real estate portfolio can be in helping you gain control over your financial future, not only as a sense of security because of the building wealth aspect, but because real estate investing is really one of those things that you can truly be hands-on about. You get to make decisions and surround yourself with the right team in order to help you grow. So you get to make decisions about the realtors that you work with, your property manager, any improvements that you make to these properties. You get, if you choose, hands-on, you have a hands-on option to help choose your tenants and All of these things are ultimately going to impact your investment's performance in the long run. But again, kind of unlike some of the other more conventional investment types that are a lot less hands on and a lot sort of more left up to the world at large and chance, real estate really just offers you the opportunity to be creative and feel in control and surround yourself with good people and things. In conclusion, real estate investing, as we know, is a powerful tool for achieving financial freedom and offering you opportunity for equity building, passive income, diversification, tax benefits, and long term appreciation. And ultimately, right, buying yourself that most valuable thing of more time doing what you want. So be strategic, be thoughtful, leverage your network and the people around you, because we're all here to work mutually and beneficially with each other and help each other achieve these great things that are all tied to real estate investing in a specific place in time. So once again, Suzanne Moore and Sarah Willis here with the Central Oregon Investor Network. We are passionate about what we do as realtors, and we are connectors, and it's our privilege and to have this opportunity to potentially help you with this knowledge that we've shared today. And or if you ever decide to buy or sell property here in Oregon or anywhere else, we would love to connect you with people who can make you feel good and safe and like you are doing the right thing.